stock graphs many times, right? This is called a candlestick chart, and each candlestick represents the price movement of a stock. Basically, when the candle is green,
What's the meaning of FAQ?
Frequently asked questions. I'm not recording it. I'm trying to get the live.
Live what?
Oh, you're live.
Mm.
Then change the account now and what check your Michael Kunnuji on that other group.
Or on the Sparkle Coin account.
Something like that.
No. Ignore. Ordinarily, I should be able to access it just by tuning in to my own account.
See there, Michael Kunnuji is on it. Who's the one person that is watching? Michael Kunnuji is on it. One person that is watching. Kunnuji is on it. And it's going to echo what we're hearing on the TV. One person that is watching. Kunnuji is on it. It will echo what we're hearing on the TV. Echo what we're hearing on the TV. One person that is watching. Kunnuji is on it. It will echo what we're hearing on the TV.
Write your answer. Write your answer. Are you ready?
Yeah.
What's your answer, Anna?
Stock exchange.
Stock exchange.
Stock exchange. The delay is too much.
Yes.
You ready?
Yeah.
Okay, go to the next one.
What's the answer?
There's a question.
Stock
This is the answer.
That is too much.
Yes.
Okay, next one. There's a question.
Yeah.
That is too much. Have you answered?
Yes, okay. Sure. That's my answer.
Next one. There's a question.
Sure.
Have you answered?
Yeah, okay. Sure. That's my answer.
Next one. There's a question. You have any question?
No.
Yes.
No.
This is a new question.
Oh, okay. I thought you said you have any question.
A new question. Provide your answer. Moving on.
Okay.
Have you answered?
Yes.
What's your answer? The answer is issue price. That's the initial price.
Did this in accounts last time.
Okay. Nathan, are you learning?
I am learning. So do you have another Bible? This one burst.
But
No, I'm not sure.
No, you like lying.
There's another question. The person that buys and sells for others is called. Have you answered?
yeah.
What's your answer?
No.
It's a broker.
That was the broker.
The person that buys and sells shares for others.
Why is not a trader? Is that
A trader is a person trading. You're trading. A trader is somebody who buys something and sells. A stockbroker helps other people to buy
yeah.
and sell their shares. Is that okay?
Yeah.
There's another question. Nathan, I can't find a pen. There's another question. I hope you're writing your answers down
Yes.
and you're marking yourself.
Yes.
The regular payments made by a company to its shareholders out of its profits. What's the answer?
Dividend.
Dividend.
That's correct. Have you answered this?
No. No.
Have you?
No.
Why no? What's the answer?
Bear
Bear
market.
market.
Okay.
You're correct.
Yes, that's correct. So when they say people are bearish in the stock exchange, what does that mean?
You're falling.
Their stocks are going down.
It means they are anticipating a fall in the price of shares. Do you understand? So if you anticipate a fall, what do?
Sell your shares.
You may want to sell what you have. Do you understand?
Mhm.
To avoid the shares losing value.
Yeah, but the shares will lose value either ways.
How do you mean no? How do you mean the shares will
You
lose?
save your money
Sometimes shares gain.
when you sell them.
No, even when you have the shares, you can buy shares at the rate of 100 naira. And after some time, that same share is selling for 150. It has gained. Do you understand?
Yes, sir.
If people believe in your company, if there is a strong company, it has huge capital, good reputation, then the value may appreciate. Or if there is prospect, people believe. Have you answered this one?
Yes.
No.
There's another question.
Yes.
Aviana?
Yes, Daddy.
Nathan, what's your answer?
Bull market.
Okay. Bull. Okay, there's another one now. It's so slow. Okay. What is the request to buy or sell a security at a specific price or better price called? Answer fast. Nathan, score yourself 0 because you didn't answer. You didn't get it.
I was still thinking.
Hey, the time is up. So you mark yourself wrong for this one. So you have to be fast.
Did I not answer?
Yes, I did.
What was the
Didn't get
answer?
it.
You didn't get it.
No, I answered.
Which term refers to the total value of all a company's outstanding shares?
Options, please. Okay.
Have you answered?
Yes.
What's your answer?
G.
Net worth.
Net worth. You said share premium.
Yes.
The answer is market capitalization. Do you understand?
Yes.
You could have heard of recapitalizing. They tell banks to recapitalize to a minimum of 20 billion, to a minimum of 100 billion, so that they have banks that are stronger. That is, they must get greater investments. Do you understand what we're saying?
Yes.
That's what's meant by capitalization. New question. A legal document that provides details about a company and the shares being offered for sale is a or an have you answered?
Yes.
Your answer?
Prospectus.
Okay. The prospectus. What is the process of a company offering its shares to the public for the first time called? What's your answer to my question? These are the options.
C.
Yes.
Initial public offer. Initial public offering. You understand that?
Yes. Right.
Is what?
With like definitions, basically in the name.
Yeah. An individual or institution that commits capital by purchasing ownership shares in a company is called
An investor. Oh, sorry.
Okay, what's your answer?
It's still investor. I didn't.
Anna, what's your answer?
Investor.
Okay. What is the measure of how much a stock's price fluctuates over time? Do you know that?
Sorry, can you repeat the question?
What is the measure of how much a stock's price fluctuates over time?
Sorry,
The price of stock. Write your answer. What's your answer?
you.
Hmm?
A.
Yield. Liquidity. The answer is volatility. How volatile? How volatile? Okay.
Sorry.
Something that is volatile. It's very responsive to um the environment. So when you say price fluctuates, you know what that means?
Yes.
It responds very easily. If, for instance, politics can determine the price of shares. A political event, for instance, something happening in government, um, a war, and things like that, people can start either to sell their shares, and the shares will lose value. Do you understand?
Yes.
But some shares are not as volatile like that. They are more stable. So the measure of how much the price of a stock fluctuates over time is volatility. Okay. A person who believes that a particular stock or the market will go down is known as a your answer?
B.
And then the boat.
The answer is bear.
Okay. But you said that they're bearish.
Uh-huh. What are bearish traders like? What do they anticipate?
The bear. The bear.
And what do the bears?
This one.
A.
Not yet. That's
The market will go down.
uh-huh. So that's the question there. A person who believes that a particular stock or the market will go down is known as what?
A
A
bear.
beer.
Do you understand that? So what was your objection about? Okay, there's a new question. What's your answer?
No, that this is the former question.
No.
Will go down.
Oh, okay. There's another question. This is a new question. What's your answer?
Bull.
Okay. What is the term for the total number of shares of a company that have been issued and are currently held by investors?
Sorry, okay.
What is the term for the total number of shares of a company that have been issued and are currently held by investors? 5 seconds. What's your answer?
Shares.
Authorized share, preferred share. The answer is outstanding shares. Okay.
Yeah.
Which index represents the performance of a selection of major companies traded on a stock exchange? You have 10 seconds. You score yourself 0
B.
here.
B.
Stock
After I said it.
stock market index. Okay. What is the term for buying and selling shares within the same trading day?
Same day buying.
Same day buying. That's it. Your answer?
Day trading.
Okay.
That's the point of buying. I'm lost. What's special about buying? Is it from different companies or the same company?
Buying and selling shares, meaning that you bought the
Okay,
shares.
buying and selling. Okay.
You bought the share today and you're selling it today.
Ha.
That is, you are assuming that the opening price of that share will be different from the closing price.
It will go down.
So in the morning, you are thinking that share, if the share costs maybe 100 naira per share, by evening when the market is closing, that it will be 105, and you would have gained.
But more people would have bought it.
No, it is that it would have gained. It should have increased in value.
It's increased in 1 day.
So many things. Just like I said, politics, war can change so many things. Put on the fan, Nathan. Do you understand?
Yeah.
So sometimes, even though it's not ideal, but some people do it. You buy today and you sell today so that you can make money. You get the logic.
Yeah.
The idea. So whoever is doing that usually will be a very bullish trader. Do you understand?
Yeah.
Because what's the person anticipating?
More
An increase. So the person is anticipating an increase. So the person buys and feels, no, before the close of the stock exchange, the day, there would have been, even if the increase is small, like it is 1 naira, if the person has bought so many, multiply that 1 naira by all the things the person bought. So the person would have gained money. Do you understand? So imagine that the difference is 1 naira and you have bought up to 1 million shares. It means that in one day you can gain 1 million naira.
But it's risky.
Exactly. The stock exchange trade is risky. Business is risky because you can buy it and lose too. Okay. A financial instrument that represents a debt owed by the issuer, that is the person issuing that instrument, to the holder, typically with interest payments, is called a share, a bond, option, future. What's the answer?
Sorry, what's that?
That represents a.
That represents a debt. What's your answer, Nathan?
Bond.
What's your answer, Anna?
Bond. No, I think it's future.
Now you think it's the answer is bond.
Oh, I do.
So don't doubt yourself too much. But there's nothing like future in stock exchange. Eh? Did you get in economics? Is there anything like future?
No.
No. Okay, what's the electronic system used for recording transactions and holding securities? Have you answered?
Yes.
What's your answer?
C.
Investment bank. The answer is central depository. You're wrong. Okay, the percentage return on an investment over a specific period is known as the capital gain, the yield, profit margin, return on equity. What's the answer?
Like, does it have to be? Is it gain or?
The percentage return on investment. Mark yourselves wrong. The answer. Okay, the answer is yield.
You know, it's you.
The answer is yield. What's the difference between the buying price and selling price of a share resulting in a profit? Have you answered?
Yes.
What's the answer?
Capital.
Okay. Well, can't that be capital loss?
But it's
But
not
time resulting in profits.
Resulting in profit. Okay. That's true. What's the answer, Anna? Capital gain. Something. Odo. Just mark yourself wrong. Straight. The next question, a company that has a large market capitalization is financially stable and has a long track record of profits is often referred to as a company that has a large market capitalization, that is financially stable, and has a long track record of profits. What do you call that? Anna?
good stuff.
The answer is blue chip stock. Blue chip. Mm. So if they say blue chip company, what does that mean?
Big company.
A big, stable, financially stable company that has a long track record of profits. Do you understand? Usually, blue chip stocks are expensive. I'm sure you know why. Aha. Aha. And I mean, they are even hard to come by. People don't want to sell them, so they're expensive. So if you invest in blue chip, if you have blue chip stock, you are likely to be a rich person.
Dad, do we have stocks anyway?
We
Me.
No, we don't. We have, but I'm not because I don't like the way. I don't have the time to monitor.
Oh.
At the time, your mom was monitoring and doing all those things, but the trouble is too much in Nigeria. Sometimes they're not sincere. They can manipulate the process and make people, for instance, a share that is really worth, say, 50 naira. They will manipulate it and say it is worth 150, and they'll sell it to people at that rate, and then they'll crash it back to its real worth of 50 naira. So they have stolen 100 naira from all of you. The share you have bought is actually 50 naira. That is the real worth. But they have sold it to people at a higher rate. You understand?
Yes.
So that's why sometimes some of us are not interested in all those things.
So stock market is not really big in Nigeria.
It's big. For those who are big players there, it's big. What's the name of the man in charge? The founder of what's the name of what's Zenith?
Yeah.
The founder of Zenith recently bought some shares, huge amounts invested in shares in one company like that. And it's massive. So those who do it know what they're doing. What's the minimum price a seller is willing to accept for a security? Have you answered?
Yeah.
Anna,
Yeah, exactly.
what's your answer?
Bid price.
Market price, bid price. The answer is ask price.
Right.
That's what you wrote.
Yes.
Hmm.
For real.
You're cheating.
What?
Yes, I think so. Okay, what is the minimum price a buyer is willing to pay for a security?
The minimum.
Yes.
Uh,
What's your answer?
sorry, is this the question?
That's the question. This is the question. If you don't answer now, you get 0. They're not talking.
Answered.
Okay. The answer is bid price. The ease with which an asset can be converted into cash without affecting its market price is called. Do you understand that question?
No.
The ease
Yes.
with which an asset can be converted into cash. For instance, you have these assets now. You have a table, an asset. That table is worth 50 naira or 50,000. The ease with which you can convert that table to 50,000 naira without losing. Sometimes when you want to convert an asset to money, you lose money.
Why?
Why? Because at that time, you may not find people who are willing to pay that amount for it.
Ask for less.
Yes. So you may get, sometimes when people don't have money, they need money urgently, they sell their homes. A home that is worth 40 million, for instance, someone can say, I need money. Give me, just give me 30 million. Do you understand?
Yes.
But there are some assets very easily you can convert them to cash without losing money. Now the question, have you answered?
Yes, sir.
What's your answer?
Solvency.
Profitability.
Yes.
Honey, what's your answer?
What of what?
This question.
The ease with which an asset can be converted into cash without affecting its market price is called.
You have 5 seconds.
Because I don't know the. I don't know if it's read it.
Profitability.
Solvency, right?
Solvency.
You say it
I
can't.
don't know what solvency is. I don't know what gearing.
Nathan, what did you write? Profitability. The answer is liquidity. Liquidity. When you say liquid, that's cash. If you
See, it will make sense because solvency is how long it can dissolve. Like,
Hey,
so
hey.
this asset is dissolved into cash.
Ah,
So it makes sense.
no, what makes sense is liquidity.
Well, that's the answer.
That's true because
That was
most
on
of
the
those
inside.
people going.
But that's the
They
answer.
convert their this thing to they sell the
You sell the
yes, the
assets.
assets, yes. It's liquid. Hey, no, I'm familiar with liquidity. Let's go on.
A financial specialist who provides advice to individuals and organizations on investment matters is called
Put it here now.
stockbroker.
an accountant, a lawyer, a stockbroker, an investment advisor.
Ah, this one is so
A
tricky.
financial specialist.
And I said
Honey,
stockbroker.
don't disturb them. Don't disturb them. Just read it to yourself.
Yeah.
And why did you put this question? For this option?
Write your answer.
Advisor.
Please keep your
Hey,
hand
but
on
it's
my
chill.
phone.
Come on. A stockbroker is someone that specializes in shares, right?
What does a stockbroker do?
He sells. Wait,
Huh?
No,
he sells shares to other people.
To other people.
not only that.
Will he sell to himself
It's that's
in the first place?
when they sell, when they exchange.
The stock exchange market.
Yes, the market. Yes, they're basically there.
Anna, Nathan, have you answered?
Yes,
C is the answer. Then.
Anna, what's your answer?
See,
Nathan, what's your answer?
see.
Hey, Nathan. He was always saying stockbroker.
Well, I said it's either stockbroker or
No,
investment.
stockbroker.
Stockbrokers deal with.
Stockbrokers, well, they can provide advice, but essentially, stockbrokers buy and sell shares on behalf of people. Is that okay?
yes.
What is the term for a company that buys back its own shares from the open market? You have 5 seconds.
Right.
Daddy, do we have money anyway?
That's right. Issue.
Why you were so worried about that?
Do we have money?
Yes. Like, oh, do I have money anyway?
You,
Okay, no.
cheap not first time. Do I have any shares?
Shares and money are two different things.
Share repurchase. Wow.
What
Never
did you
heard
say?
that. I put
So that
right.
a company can buy back from people who sold to before.
Yes.
At the higher price, right?
At the prevailing price. At the prevailing price.
But people really want to sell, like, because they can find what's it called? Like people that are willing to pay more than that.
So yes, they have to bargain and agree. So it's not entirely up to the buyer. The buyer and the seller must agree.
But can they really buy all of them back?
It may be difficult. Well, they can give incentives to encourage people to sell. Next question. A sharp and sudden fall in stock prices across a significant proportion of the stock market is called. And why are you talking openly? If you miss it now, you don't know it's a disgrace to your mommy.
It's still can't be disgrace. You know what? I'm familiar with these things. Just that
Because you used to work in electronic registers.
everyone does register. We used to
Nathan, what's your answer?
Let's watch.
Hey,
Anna, what's the answer?
But Anna is not going to follow.
Okay,
It's you.
you guys got that right. What the formal group of stocks and or other investments managed by a professional fund manager?
What's the name of the book?
Let me put it here now.
You have 5 seconds.
No.
What's the
5, 4, 3, 2, 1, 0. Nathan, what's your answer?
mutual fund?
Anna,
Same here.
you're correct. Okay, the price to earnings ratio is a widely used metric that compares a company's share price to its dash.
But the thing is slow.
Baba.
Price to earnings.
The word in which we are comparing company share.
You know, you do the way.
5 seconds. Time up.
I wash my food.
Your answer,
Earnings per share.
Anna? Nathan?
I
wanted to say as written,
It's
as
earnings per share. The next one, what is the term for shares that give their holders a fixed dividend, typically with no voting rights?
I know this thing now.
it's ordinary shares.
I'm sorry, what am I on?
It's two.
Answer now.
Ordinary shares.
Stop now.
Sorry, Daddy.
And don't say it before we've written it.
Eh? Preferred shares, just it is great.
I hope you people got your do there.
By following her now.
Did you follow her?
You didn't
By
talk
following
now.
her, let's say.
What did you choose, Anna?
Why do you think it's preferred shares?
What did you write, Anna?
But I didn't follow her. I said it from my heart, not because of her.
Why would you call it preferred?
Because priority is given to them.
Preference.
There is a fixed dividend that you will give to them.
Oh.
Okay.
So
So even if the rates drop,
So they don't. It's like they are not bearing so much risk.
yeah.
You understand? But the ordinary shares, those ones will have voting rights. You understand?
that next. And what that is like? What is like?
What is the term for shares that represent ownership in a company and a claim on a portion of its profits and assets, typically with voting rights? You have 5 seconds for this.
Let me just explain it now. So the answer is
It's what?
Have you answered?
Yeah.
Okay, so let's go on. What's the answer? Good.
I get it.
No, we didn't say anything.
I said, show Daddy. I did like this. A B.
An increase in the number of outstanding shares
That's not what you're reading.
by dividing existing shares into more shares is called a dash.
Okay.
So like increase and increase.
In the number of outstanding shares.
But it's not is
An increase in the
No,
number
I've
of
said it before. It's
Okay. The regulatory
What
is not bonus. A stock split. The regulatory body responsible, you have 5 seconds, for overseeing the stock market and protecting investors is often called the dash. Okay. What is the term for a market where securities are traded between investors after their initial public offer?
Please come again. What is the time?
For a market where securities are traded between investors after their initial public offering. Time up.
Secondary trade.
Secondary market.
Yeah, that's secondary market.
Trade it. That's yes.
Huh?
They do the trading in their
So which one is the primary market?
The ordinary shares that we public shares.
Public offering.
The one you buy directly from the no, you buy directly from the firm when the firm does its the public offer. Do you understand? Okay, so you can have an initial public offer, but you can have another public offer that is not the initial public offer.
Yeah.
Do you understand? For instance, when a company is listed newly in the stock exchange market, there can be a public offer, which is initial. You're just starting. People feel, oh yeah, there is a prospect. This company will do well. They will buy. After 10 years, you may want to expand, and you can have another public offer, but you can't call that initial public offer again. Do you understand? If you're buying when there is a public offer, that's going to be still primary market.
And it's risky. Like if you are buying.
In fact, it's not risky.
Was the low?
Usually it's low or it's reasonable because you don't know whether the company will do well or not. Okay. I mean, stock generally is like gambling.
Oh, we can invest in like Apple or
Yeah.
Samsung.
What do you call those kind of companies?
Cheap.
Blue chip companies. If you invest in blue chip companies, yes. Like Apple, like Microsoft, like Samsung, Sony, all those. Yes, those are blue chip companies.
Like, but Microsoft is not doing as well.
It's not doing as well. But it's blue chip. Do you know for how long they've been around? Do you know what they have achieved? Do you know their markets, their capitalization?
The question is already on the board.
There's another question. A situation where a company sells new shares directly to its existing shareholders is known as. Have you answered?
Yes,
This company is 7.
Have you answered?
yes.
What's your answer?
Private placement.
Private. Mommy, what's the answer?
Rights issue.
Your mommy is correct. Okay. That is, there are people who they're already shareholders.
How is it their right?
You are now giving them the opportunity to buy more shares. It's different from the public offering. The public offering, the whole public can buy.
Why we said private now?
This one is a matter of rights.
You're saying private again. See.
Do you understand?
That's why it can't be private. I'm saying public, and that's why I said that's why it's private.
What is private placement? I'm not even sure there is any language like that in stock exchange.
So it's in the options.
They should put it to confuse that there's private placement, but it's rights issues. It's rights issue. Okay, what is the maximum number of shares a company is permitted to issue, as stated in its articles of incorporation? The maximum number of shares a company is permitted to issue. Answer, you have 5 seconds. What's your answer?
Authorized shares.
Excellent. The total monetary value of all goods and services produced within a country's borders during a specific period, this one easy peasy, is known as all goods and services produced within. Your answer?
Gross domestic product.
Who told you to say it out? Nathan, what's the answer?
Gross domestic.
Okay. What's the difference between gross domestic product and gross national product?
National
is for the whole country.
They say within a country.
So domestic is for the whole states.
Specific period is for domestic.
National is forever and ever.
Specific period.
You are a bush.
Domestic is not for the total money.
This is the difference between gross national product and GDP. GDP, all the monetary value of all the goods and services produced within a country. But gross national product will now take away all those products by foreigners and add all the products by Nigerians abroad who are sending money in.
Okay. Yes.
Do you understand?
Yes.
Everything that comes to the nation, because many of these things that are produced within the country don't belong to the nation. I don't know whether you get the logic.
Yes, sir.
So, but the gross national product, if Nigerians are living in the US, for instance, and they send money home. So if there is, what time do we use for that? Money sent home. By diasporans. What's the term?
Depend.
How can it be stipend? Honey,
Hmm?
money sent to the country by Nigerians in diaspora. What do we call it?
There's a term for it. I should know.
Why did this word escape me? Where's my phone? It's not here.
Yes.
We'll come back to it. Okay. What is the term for the process of determining the fair value of a company or its shares? Answer in 2 seconds. The fair value of a company's shares.
Use your pattern, but keep it.
Yes.
And use it, but keep it.
The value of a company or its shares.
Brokering.
Nathan?
Valuation.
Is valuation. That's the answer. Okay. Add up. What's your total score?
Have you put down English?
This is
No.
English.
This is English we're doing.
English game.
Yes.
Economics. The terms. Okay, terms. You mean?
Lexis.
Construction.
Say Lexis.
Lexis.
There is a part of English called lexis. That's the vocabulary related to a particular discipline.
Terms.
We have about
So how did you fare?
I did well.
What's your total score?
Look.
Don't worry, I don't do well.
I'm asking you what score.